unless it gets bad. And that's what's really exciting to me. To be honest with you, I'm more excited and more hopeful of the future because there are friends of mine and family members that said, whoa, I didn't expect this. I don't like what I'm seeing on TV. I don't like, the policies that are coming out of the government right now. I don't like this. I don't feel comfortable. I'm like, exactly. Well, you wouldn't experience that unless it got really bad. And just like
it's something people should stop worrying about in terms of today and tomorrow and just realize logically, mathematically, it's pretty damn sure, I'm pretty damn sure that we will wake up one day and see prices higher than people can really even imagine.
For months, economists have warned about persistent inflation, which remained a challenge last week as both consumer and producer prices rose unexpectedly. Gold and silver prices dropped to multi-month lows, with investors favoring equities and Bitcoin over gold. Despite this, precious metals held critical support levels, with silver rebounding by 7%. Geopolitical uncertainties and record Valentine's Day spending on jewelry in the U.S. maintained demand for gold. China's dominance in the gold market continued with record high activity in several sectors. Despite selling pressure, analysts still see opportunities in buying gold during deeps. Now, in the continuation of the episode, we'll show you more clips of Schectman. But first, hit the like button, smash the subscribe button, and turn on notifications. Let's get into the video.
Where $2.50 or $2.75 premium to the Western price is being offered to those sophisticated enough to be able to buy it in London or New York and deliver it in China, they ain't ever coming back. And so this is a methodical process, this little by little by little, then all at once. I say it all the time, logarithmic decay. You can use it in so many facets of the world we find ourselves in right now, and this is no different. So they're playing chess, we're playing checkers, and we will wake up at a point in time, and silver will have moonshotted, and no one will know what the hell happened. But guys like you and I, who have been talking about this forever, will have a very good idea what had happened. And what it, to me, will ultimately transition is the COMEX and the LBMA will no longer be beholden to a Western rehypothecated of almost 1,800% system. It will transition to some place like Shanghai, which is largely cash and carry, a reflection of what the price should be. And right now, they're telling you it should at least be almost $3 higher than the make-believe Western price, and we all know that's even way too cheap. If they were smart, they'd crank it up even higher, but is that smart? That's cutting off your nose. Now everyone will grab and say, well, something's not right here. But if you do it just enough to incentivize these traders to arbitrage, it's really, I think, and you look at how much silver's coming off in gold and rare earths and base metals and all of this stuff coming off the exchanges, they'll continue to do this until no one is foolish enough to let it go at make-believe prices. And then they flip the switch, and now you see a new price-setting mechanism for the rest of the world by a country and countries that have been the ones understanding it, accumulating it, and producing it for years.
The BRICS are now completely destroying the dollar. The countries all around the world that are just saying, you know what, we're not even going to do like Iraq. They're like, we don't even want dollars in our country, $0. Other countries saying we're not going to use dollars for trade settlement anymore, especially in oil. This is the end of our empire. And it's not that the dollar is going to go away to nothing, right? It's going to be worth a lot less than it is, today. It's going to be worth a lot less in the future, but we're at that end, and it doesn't happen overnight. Father Time just doesn't yawn and goes, hey, let's switch it from inflation to deflation, or, from money printing to no money printing. It doesn't happen overnight. And we're seeing that, play out right now. And I think that's what's important for people to understand, unless it gets bad. And that's what's really exciting to me. To be honest with you, I'm more excited and more hopeful of the future because there are friends of mine and family members that said, whoa, I didn't expect this. I don't like what I'm seeing on TV. I don't like, the policies that are coming out of the government right now. I don't like this. I don't feel comfortable. I'm like, exactly. Well, you wouldn't experience that unless it got really bad. And just like the Dark Ages gave birth into the Renaissance, we've got to think about every time throughout economic cycles, throughout the history of Earth and civilization, it's got to get super dark. Like they say, it's always darkest before the dawn. It's true. It's all about nature. It's all about human emotions and cycles. And to be honest with you, I I think honestly, if the current mentality of this government, I'm looking for a really good choice of words, if you know what I mean, continued on for another 4 years, I think more evil would be exposed, but I don't think you'd see it get as crazy as if this entire government shifted back to what it was. I think then it's going to get really crazy, because I think there's a certain type of human being that is a taker and not a giver to society. And they always want and they always need. That type of human being, that mentality will always be here. I honestly believe it's like 10 or 20% of the world's population. There's sort of like that drain on society. And I'm sorry if I offend people, but if I offend you, you're probably there in that moment. If you're not a doer, a giver, a lover of just how this gift of life, then you've got to sort of look at this moment and go, those people are the one that get enraged when they're shifted out of their box and not handed things. And it goes back into entitlements. Sorry, I'm trying to pick my words carefully, but I'm sure you know, Elijah, it's been getting a little nutty in the media, what we're allowed to talk about and we're not.
Welcome to today's show. We begin with alarming news from the U.S. commercial real estate sector, where a staggering $1.5 trillion wall of debt is on the horizon. Analysts warn that this looming debt could exacerbate the risk of defaults. Commercial properties potentially might be plummeting by as much as 40%, continuation in the housing problem as home prices soar to all-time highs. Meanwhile, in central banking news, the U.S. Federal Reserve's balance sheet has surged by almost $100 billion this week alone, now totaling a remarkable $400 billion. This expansion reflects the Fed's ongoing efforts to support cash-strapped banks, particularly following the collapse of Silvergate, Silicon Valley Bank, and Signature Bank. Adding to the strain on the banking sector, projections suggest that U.S. banks could face another $160 billion in losses as the commercial real estate market braces for its most significant crash since 2008. With the sector on shaky ground, the potential impact on banks underscores the challenges ahead for financial stability. Stay tuned for further updates as these developments continue to unfold, shaping the economic landscape in the United States and beyond. Now, in the continuation of the episode, we'll show you more clips of Michael Pento. But first, hit the like button, smash the subscribe button, and turn on notifications. Let's get into the video.
Stanley Druckenmiller, buy low, sell high, is selling tech and buying mining shares. Oh, wow, that's revolutionary. What you just explained is asymmetrical risk reward, is what can I invest in that has the lowest downside and the best upside? I mean, I don't know if I've ever seen an asset quite like silver, which is decreasing in supply globally in terms of mining supply, what's in the ground, the gold silver ratio, mining ratio, and has an acceleration in demand, both militarily and industrially, green and digital, and monetarily. And this duality in demand, it's not just one demand source for a commodity, it's several, coupled with its diminishing supply and its suppression, where, several years of structural supply deficit issues in silver. And at the same time, you have a lot of the speculators in this market who are getting frustrated and capitulating. Some are. And so this big rise that everyone expected, that attracted them in the first place, if you believe in contrarian indicators, it's got to be getting imminently closer. And then you see all of the stuff draining off of COMEX and the LBMA and the Shanghai Gold Exchange. And to me, it's something people should stop worrying about in terms of today and tomorrow, and just realize logically, mathematically, it's pretty damn sure, I'm pretty damn sure that we will wake up one day and see prices higher than people can really even imagine.
Yeah. So I talk about de-risking your investments all the time, whether it be cryptocurrency, real estate, anything. You always put in a certain level of risk, but you want to take away a bunch of the factors that could screw you later on, right? So one of those ways is to always have a game plan. If something turns, I've got my money invested here, let's say it's in real estate, how am I going to exit if something goes bad, like I lost my job or my pay gets cut? Then you at least have options. And when you write those options down, it's like an SOP for your financial life. Most people don't have those. I talk about in one of my courses, have standard operating procedures for your life, for your side hustle. Another thing is we have 7 days in the week. There are a lot of people, as a fireman, I work 3 days a week. I was gone. I lived at the fire station 3 days a week. And if I worked overtime, I was gone for a fourth. But I had a couple days left. 3 days at minimum to work a side hustle. I started with a garage sale. I started selling electric trains. Electric trains turned into me being over a millionaire by the time I was 25 because I turned that money from electric trains into real estate. And I just kept going. So, de-risking your financial portfolio, being completely diversified. I've lost everything that I put into stocks 3 times because I put them all into one stock at a time, whether it be 20,000 or 300,000. I had to learn that lesson 3 times. I'm an idiot when it comes to that. Cryptocurrency broke me of that. you want to have armor, built around you. Go into the cryptocurrency market, and you'll see those wild swings. It'll really make you think twice about, how much leverage you want. But my point being is that, that is one thing, diversification. Another thing is starting that little side business. I mean, it's as simple as buying a shirt from Ross. You're like, those are expensive. I just got it 90% off, and flipping it on the internet. It's so simple to turn $10 into 100. You just got to do it. And so those are the things I've been teaching people, and we've seen amazing success. I just, I don't know how to get it out there more. I'm super passionate about it and really excited about all that.
What do you think of today's show? Do you agree with the Economic Ninja way of living? Would you bet the farm on gold and silver? Post in the comment section down below if you had the guts to risk your whole net worth into one trade, and tell us your price prediction for silver in 2024. Subscribe to the channel if you have not yet done so. Share this video with a gold bug, and check this video right here because you'll love it. I see you on the other side.